Hello everyone, I'm back. I took a break over all of December. I just needed a break from all of this content, and I know it's really important and I really like making it, but I chose to take a break for December. I think we had a really busy year. Everyone I talked to has had a really intense year, and I just really enjoyed myself during December. And I had a really great month, so I hope everyone else had a great month, but we are back to it this month. So as you all know, this is my market update for January 2023. We are in 2023. It is crazy to even say 2023, but here we are. And as a quick note, all of my typical content is up, so you can check YouTube for all of my other videos. And if you have any questions or you want information specific to yourselves, you can always reach out to me on any of my platforms. Link is in the bio, and you can just go to my website and contact me through there, danielabiagi.com. Okay, so your market update for January 2023. So if you are here, as always, go ahead and leave a comment, say hi. I try to keep this particular video really short and sweet because I'd like to have at least one piece of my content per month to be just very stats based for those of you who love numbers. So we are going to hop into it right out of the gate. Of course, you can always catch this on the replay as well. So we are going to be going over the RAB board stats, which is the Hamilton Burlington board stats. I am also a member of TREB. You can always contact me if you want something a little bit more specific to that board. Okay, so again, I am going to be looking over to the side to my laptop. I have figured out a better way to do this. I have not yet set it up, and I do not know when I'll have time to do that. So until then, bear with me because I'm going to be looking over to the side quite a bit. So as always, we are going to go over active listings, inventory rate, sales to list price ratio, and average days on market, which is going to inform us a little bit about what we've got going on. I am going to be doing a video coming up in next month or two, probably in February. I did some I attended some really great economic seminars, I guess, ones that I do go to frequently each year. And these two were very interesting, and I do have more information to share. I'm going to share a little bit with you today, and I will be doing like a longer video on that, I believe. So just as a side note. Okay, let's get into it. So number one, number of active sales right now. So in all of the board, all of the houses, detached, towns, condos, every single listing up right now in the RAB board, 12,034. So that number is actually trending down. Hamilton, all the active listings in Hamilton right now is 956. Hey, Jessica. And in Niagara alone, 1604. So we're actually seeing smaller numbers as far as inventory goes overall. So we've seen a consistent decline in inventory. And I think December of last year, or this past month, was the lowest. Obviously, we've seen in a long time. December, Christmas, not a lot happens in real estate typically, which is also, as a side note, a really great time to sell because you have very little competition in December. If somebody has to move, and there's always somebody who does have to move, this is a great time because there's not a lot of options in December, and your house will shine as one of the shining stars in the night. Okay, number two, sold in the last month. Just in the last month, sold again across all listings. So these could be condos, towns, detached, whatever. We have 2,911 sold in January. So the number from November, which is the last time I did this video, that's actually half. Okay. Overall inventory rate of the RAB board combined, the entire board right now, we're actually looking at 4 months of inventory. If you haven't watched these videos before, an inventory rate is if we stopped listing houses this second and just sold everything there was to sell on the MLS, it would take 4 months to sell it. To put that into perspective, we were in the heat of the pandemic when things were their absolute craziest, and things, again, we don't ever want to see a time like that again. It was, a lot of people made a lot of money, but it was also very tumultuous and volatile. But in that really, really crazy pandemic, when people were holding, offers for 5 days and stuff like that, the inventory rate at that time was like 5 to 7 days, only because we were holding offers, meaning we weren't looking at offers. We had signed sellers' directions not to look at offers for 5 to 7 days, just so that we could allow the listing to absorb into the market long enough so that people could actually see it. And so that is what we came from just a short few years ago to where we are now at looking at over 4 months of inventory. Keep in mind, balanced market looks like 6 months of inventory, and we are obviously headed, if not already in, a balanced market. In Hamilton alone, we have 2.8 months of inventory, and Niagara, we are actually at 5 months of inventory. So Niagara's been balanced actually since October. Okay, so we are no doubt heading, like I said, if not already in a balanced market. So what we are going to be seeing, just as a side note, what can you expect? We're going to be seeing prices adjust, obviously. We've seen that, very blatantly for the past, I would say, since probably we started seeing it since the end of spring last year. We're going to start seeing urgent selling stop, which is what I was just describing. Like we had to hold offers. We wanted people to see the homes. Things were selling like as soon as they were listed on the MLS. Things were selling off market as soon as they were being advertised, right? And it wasn't giving people enough time to actually stop and think, do I like the house? What would be a good offer for me? It was really putting people to the fire. They had to go in firm or they weren't going to get the property. They were in competition sometimes up to 70, 80 offers. They had to be 200,000 over asking. Like all of that, we are seeing stop. So basically, if I could just pull a few pieces of information from the economic seminars I attended this past month, is two pieces I want to go over. So the first one we'll do before I do the next point, but this one is from CIBC's Benjamin Tal. He is someone that I do follow, and I will attend any of his live seminars when I can, and he's having them online now, so if you guys ever want to check them out, this is a great source of information. But he did share that so during the pandemic, we actually saw housing prices increased by 46%. It was wild. And it's actually only declined by 13%. And just that 13%, I think, has really sent people into like a full, we've all seen it. Sellers are still wanting what they want, and it's very disappointing to them sometimes to know they're not going to get that number. And that is going to be adjusted by 13%. So the higher you go up in price point, if you were going to get 1.6, you're probably now going to get something closer to 1.15. Okay, obviously the lower you go in price point, 13% is less. But it's one of those things where it's actually relatively not that bad, because the increase was so dramatic. It wasn't a real increase. It was actually just kind of like, a result of the times. Okay, number 3, sales to list price ratio. We're actually still at 96.9%, which is obviously under the asking price. But if you take it from the perspective that people are now adjusting their expectations, they are pricing properties more and more realistically, which is exactly what we saw, this past January. We're seeing a lot of homes back in that middle price range. And we are starting to see sellers accept that this is the price range that they are in. Number 4, average list price. We're still looking at an average gap between list price, average gap of 150 to 200,000, like I said, from the asking price. So the average list price was just like last November to December, it was like 9 something, like 9 and change, 900,000 and change. Then the average selling price was like 736. So we're still seeing under average offers being accepted. Again, all of these accepted offers that are now under asking price, even if asking price is more reasonable, that is still adjusting the market down, right? Last point here, number 5, average days on market. Average days on market today is 68 days on market. So that is collective average days on market. We've all seen houses right now that are listed for 100 days, that are listed for 80 days, right? So the average days on market is 68 days on market, which means you're probably not going to see a lot of activity unless you're really priced really, 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 really well or really low that quickly, or at least not as quickly as we were seeing it. To put that into perspective, last March, we saw an average of 17 days on market, 17 days on market. And that is when we started to see the increase. So it was still kind of declining until March. March, we hit 17 days on market. That was over 2 weeks of days on market, which is typically our rule of thumb. When you're selling your house, you typically want to see a showing or an offer between 14 days or 10 showings, whichever comes first, to know that you're on the mark. As far as price point, that goes for any market. But then we saw those average days on market increase in March to 17. And since March, have increased pretty steadily all the way up to this January 2023 at 68 days on market. So if things start to even up come the fall, things probably, we may have seen the worst of it. So economists, sorry, that word always trips me up. Economists project that we have weathered the worst of the rate hikes and inflation will start to decrease. And we've already seen inflation decrease in some areas. So that's usually the first sign. I think they mentioned oil and gas have already gone down. Oil has gone down. That's the first sign. We've seen gas come down. So we're seeing little signs that inflation is starting to come down. Again, and this is the second, I wanted to reference the second point that I learned from those economic seminars about the upcoming year. So things are looking the way they looked for January. So what are we going to see in February, March, April, May? So the biggest part here is that we've started to bridge the psychological gap between sellers and buyers. So sellers and buyers were at a complete standoff for months, right? Buyers are going to wait. They're not going to buy anything. They're going to wait for prices to come down. They're going to wait for prices to come down. And sellers are not going to sell anything because they're going to wait for prices to go up or wait to get what they want because everything's going to get better once the rates, stop increasing. So there was a standoff. So everyone's kind of waiting for the market to turn, according to what they want it to be, right? So that's kind of where we were at psychologically. So RBC economist Dave Richardson projects that the standoff will resolve in the spring when markets start to move again. But again, we're not talking about it going back to what we saw in the pandemic. In the past is the past, it's over, right? That was a time, that was a very isolated time. I don't know what they call it. It was a condition. It was an event, not a condition kind of thing. But we're going to start seeing things move again, which is what we all want. We want a healthy economy, right? And so, but we all know what that means. When things start moving again, that means that sellers are going to face even heavier competition. So if we see inventory increase in the spring, sellers are going to see more competition than they're used to seeing in the past few months. And they're going to have to be even more considerate regarding the price of their listing because now not only are we in a different market as far as price, we have more listings potentially pop up in the springtime, which is pretty typical of every year. However, this year, buyers are still going to have most of the power because of all of the events that we just went through. So we're going to see heavier competition. So not only are you going to have to be priced properly, realistically for the market we're in, not the market we had, you are also now going to be up against a lot of other homes. And this is where we're going to start seeing things change. People have been really pressed for, if financially for a long time now, a couple of months, 6 months, 8 months, and people are going to get a little bit more realistic with what they can expect on the seller side. With that, they anticipate a lot more distress selling, which means they're choosing or have to sell their homes in order to move into something that's more realistic for their household income or budget. And again, a lot more inventory for buyers to pick from and a lot more competition for sellers. So that's where we're at for January. Thank you to everyone who has signed in. Hi to everybody. And again, I like to make these as short as I can, but I did add a little extra in there today. As always, if you found this helpful, go ahead and follow me on all my platforms. You can find the link in the bio for that. And you can also find buyer's guides, all these different kinds of guides right now that I've created some resources for people as well during this time. We have buyer, seller, working with me, investing, and custom home builds. So again, like I said, if you have any questions, you can always reach out to me on any of these platforms. Catch me on the replay if you like. And I hope you guys had a great January, a great start to your year. And I look forward to the rest of 2023, and I will see you next month.